I'm going to share with you some tips and ideas about looking for high probability trade setups. So let's get into that right now. Hi traders, Andrew Mitchem here, the owner of the Forex Trading Coach, and today is video and podcast number 218, and I'm going to be discussing with you and sharing some tips and ideas of helping you to look for higher probability trade setups. Trade setups that are going to work in your favor far more often than they're not going to. You see, the problem is with a lot of traders is they don't have a strategy and they don't really understand the market. And when I look around at different systems and different ideas that people tell me they're currently trading, and by the way, they're not making money on, otherwise they wouldn't be coming to me, and what they're doing, it kind of just doesn't add up to me. Most people are relying on an indicator. They're looking for a line to cross over another line on their charts. They're looking for a dot to appear on their charts, or for a line to change color, or all these type of things. And that really is not true technical trading. You see, to understand trading properly, you have to understand the charts and look at the price. You have to understand what's happening in the market right now. And when you clutter your charts with too many lines and graphs and dots and stars and all these things that people tend to, for whatever reason, think it's a really good idea to clutter the charts with, what you end up doing is not being able to see what's actually happening in the price and understanding what's happening. Someone sent me a screenshot the other day and said, "Hey Andrew, can you give me some advice on my strategy?" And I actually couldn't see the candle patterns underneath all this congestion of this big mess of spaghetti and lines and things on the charts. It was horrible, and no wonder this person was confused, because there was just so much stuff going on. And I said to them, look, strip that off and start again. And it was something that I discussed on my webinar with my clients last night, and it was all about putting factors in your favor to give yourself a high probability chance of success. Like, what is it about this trade setup right now? Even when you understand candle patterns and price analysis, you still need more than just that. You see, I'm a big believer in candle patterns and candle shapes and where they occur, but you can't just say every bullish engulfing candles means that the price is going to reverse and start going up. You cannot do that. As likewise, if you use, let's say, Bollinger Bands, you can't say every time that the price has hit the upper Bollinger Band, it's now going to start coming down again, because it won't. It's like if you use divergence. Every time you see positive divergence, it doesn't mean to say the price is going to suddenly reverse and start going up again, because it won't. You have to put a combination of different factors together. And when I was sharing with my clients just on the webinar last night, I was sharing with clients some of the trades that I've taken, and some that I hadn't taken, but some that I'd seen. Now, with the benefit of hindsight, because at times I wasn't here or I was sleeping, but I shared a lot of trades with clients. And when we had like 5 or 6 different factors all showing at the same time, backing the trade up, all showing the same thing, the same confirmation, on most of those trades we had outstanding high reward to risk trades that went to their profit target without hardly getting into any drawdown at all. And it's remarkable how consistent that happened. So it is all about putting those things together. You can't just rely on one indicator. You cannot rely on just one or two things. You have to start to look at the price. Look at the price number. What is the number of the price right now? Like the level of the price. Just because your indicator paints a little star or dot to say buy here, you might be buying straight into a strong round number. And there's some great examples on the charts. If you go and look at your charts of where the price stalls or reverses, more often than not it will happen at a round number. Now, what I mean by that is a number ending in 00 or 50. Now, go and have a look. Just try and, after you finish watching this video or listening to this podcast, just go and do that. Have a look at your charts. Scale down to the shorter time frame charts, like an hour chart or something, and see every time the price gets to a level and then it comes back, more than likely it's going to be stalling at a round number. So if you can start to add different factors and confluence of events together with a sound technical strategy and look at the price and forget most of the indicators and wiggly lines on your charts, forget most of that, get back to true price. Where is the price coming to? Where is it bouncing? Why has it bounced at that level in the past? Is there a suitable candle pattern? There are a few other things that I look at and teach. Does it have the backup of the daily strength and weakness analysis to, let's say, I'm bullish on the daily chart, on the euro US dollar, let's say, on a 1 hour chart, if I see a bullish pattern and it's in the same direction as the daily chart, it just adds more and more probability of your chance of success. Now, I have an email here from a client called Alex, and Alex says, I've been doing exceptionally well over the past 2 months trading only the 4 hour time frame charts. I have a win-loss ratio of 75% and my count's up over 7%. So that backs up everything I've just said. A high win rate, a higher time frame charts, not doing too much trading, not watching the charts all day, but 7% gain on live account in 2 months from someone who's relatively new to trading. You can do that too. If you'd like to know more, drop me an email, andrew@forextradingcoach.com, or leave a comment below this video and I'd be more than happy to help you out. So once again, this is Andrew Mitchem, the Forex Trading Coach. Have a great weekend. I'll see you this time next week.